Well, what a move by the market yesterday. Picture perfect. Just when you thought that this was the peak of the good news, well, clearly there's still some FOMO feeling out there. And you did have a fair amount of long build-up. It was not just short covering that you had in the market. So net result, we made it back to that 25,000 mark. In fact, knocking on the rows of 25,100 now in the Nifty futures. Great participation across sectors. It was large caps, momentum plays, all of them participated in yesterday's move. Cement, infrastructure, some of the key heavyweights from within the banking pack and autos, they were the ones which actually led the charge. So the question really is, how much more?
Yesterday's price action was nothing short of, absolutely stellar and amazing. And the market, the way it really did a pole vault between, 1 o'clock to 3:30 was nothing short of extraordinary. So we'll talk about it, but I just want to address that. What are the other talking points for the day, and then we'll address the specific things here. US futures are steady after S&P gained for the 4th day on the trot. Fed Chairman Paul warns of high interest rates and volatile inflation. Crude is volatile, but Nifty is above 25,000. And then Apple has clearly come out and has indicated that we love India and we are committed to India. So let's look at what are we discussing. Those are the headlines, but as we walk into trade this morning, the first thing which in a sense is occupying everyone's mind is what happened yesterday? Kya hua kal? That's the big question. And what led to the surge in the market? Can we have that question, please? Why do we have top news? Okay, never mind. So what happened yesterday, Aisha, was this mammoth FII comeback. And it was there in the cash market, it was there in the F&O market, it was not supported by the domestic institutional investors. If you really talk about FOMO, it's the FII, I think, who are feeling the FOMO now. And yeah, they're feeling the FOMO now because they've missed on. The general consensus view was that go to China, don't come to India, avoid India, but load up China. And China has not performed. It is underperforming. So this FOMO, I don't know why it happened yesterday. I don't have a reason why, but it happened yesterday. There was no news. There was no global trigger. There's nothing you can read in between comments which came from the US president on India. But someone was in a mood to really catch up. When you see a surge like this, which is driven by large flows, then it is an indication of momentum, not so much so the fundamental factor. Now, will FII buying continue? Who knows, Aisha? Yeah. Very difficult to fathom. All I know is that India has emerged as a preferred destination. But it is not like this cheap destination now. April was separate, May is separate. If it continues, then difficult. There is nothing logically which I can establish excepting the fact that this is FOMO and these are FIs who have been on the sidelines. Now they've thrown their hat in the ring in the hat, so to speak. Nothing substantial to add excepting that I loved what happened yesterday and I hope it continues today.
Oh yeah, absolutely. So here's what happened yesterday, but here's what happened overnight. Just very quickly, wanna run through the kind of cues that we're handed over with. You had the S&P 500 index higher by roughly about 0.5%. Nasdaq though was a little bit soft in trade. The Treasury yield lost about 10 basis points. It's currently hovering around that 4.43% mark. And the dollar index, that also saw a little bit of softness, was down about 0.2% overnight, and we're at that 100.78 level. Brent oil, that's seen a little bit of cool off. Talk about volatility. Crude definitely seeing wild swings pretty much on a daily basis. So 2.5% of a blip down coming in. We're still around a very comfortable $64 per barrel kind of range. Trump is claiming that he's very close to a nuclear deal with Iran. So it seems like the world is headed in for a truce. It's not just India, Pakistan. The US data for the month of April had a very dovish skew, both retail sales as well as the core PPI, initial claims, industrial production as well. So that's good. And the Fed is implying that rates will be cemented at 2x 25 basis points for 2025. So 2 cuts is what the Fed is indicating so far. What about Asia then? Let's check in on that, because yesterday some of the Asian markets had it a little bit rough. We were pretty much the world outperformers. Hong Kong is still lower by about 1%. It's down about almost 250 points, and China once again is seeing weakness, down about 0.6% as we speak. But the implied open, that's indicating another 100 point of a bump up, and now we're only getting closer to that 25,200 print. So it doesn't seem like it's going to stall here in any amount of hurry. But again, the point is, if it's FIIs who are feeling the FOMO, it's the large caps which are going to charge up. Well, what's happening within the broader end of the market? That's equally intriguing, because if nothing on a net basis, the broader markets from the April recovery have done much better than the benchmarks.
And I continue to maintain that that will do better, because you don't know whether this kind of a big number from FI will continue or not. I mean, it's a function of whether they come back today and whether they stay next week. So if you assume that they don't sell, and the liquidity is not going to be moving against us, then the market will actually tilt towards small and mid cap stocks. And I'll tell you why. Let's understand the composition, why small and mid cap stocks will do well. First, domestic mutual funds are sitting on reasonable amount of cash, 5 to 6%. There are schemes which are sitting on 25 to 30% cash. You cannot be sitting on cash if you're managing public money indefinitely. So there would be a catch up which will happen by the domestic industry. Then if you are a HNI investor or a retail investor, or even a HNI trader or a HNI a retail or HNI trader, you would say that, okay, the concerns are over, markets are safe, we are nearing an all-time high, I've missed on the best part of the rally, what do I do now? Well, I'll have to jump in, perhaps take higher risk, and perhaps buy into small and mid cap stocks. That's where I think you will see some amount of beta movement which will happen in small and mid cap stocks. If you don't see any shakeout in global markets, no negative news flow, I think small and mid cap stocks have a greater scope to catch up, simply because the market now is very confident. Now I can throw in these elements of valuations, peak of the good news, but when you have such a large flow which is coming, or which has come yesterday, you cannot argue with the strength of the market. Like I always say, that don't go against the mob's going to rob you. So what do you do in this market? Well, I would say don't buy leverage long. If you're cautious, take some chips off the table. But if you can really digest some more volatility, then maybe some more gains are left in the table. But that will come with volatility. Small and mid cap stocks, if you own them, just don't sell them right now, at least for next couple of days. Arvind Sankar joins us live, managing partner.
If you like this video, then like, share and subscribe to ET Now.